Good morning, good afternoon, good evening, and welcome to the Wednesday, 7th December Bull versus Bear webinar. Steve Miley on the call for trade day. So, first of all, apologies yesterday. Not only did James and I manage to stream into the wrong room, we streamed into the daily webinar room. So, it should be in here, okay, on the Trader Mind page, okay. Drop down is here under resources, Trader Mind sessions. That's where I am right now on this page. That's where it should have been. We streamed it into the daily webinar room where you guys are now, who are watching live. And then we managed to have an issue with the sound and you couldn't hear us. And we did the whole webinar and realized there was a sound issue with about 30 seconds to go. So our apologies. We do know what we're doing around technology as well, which is the funny part about the whole thing, I guess. But it's on us. So our apologies if you got up particularly early or you were waiting around for it. I know there were some people on. We could see people in the room and we could see people jumping around. We received a few emails, but not until it was too late. Right, we're going to repeat. We're going to have a go again. Okay, so the Trader Mind session should be happening today so it's only in just over an hour. So in an hour's time, or just under an hour now. In just under an hour's time. So that is going to be 7:30 Central, 8:30 Eastern US. That's going to be 1:30 p.m. if you're in the UK, and it'll be 2:30 on Central European time. Okay, 7:30 today, Wednesday the 7th December, 7:30 Central Time CT, 8:30 US Eastern, and then 1:30 p.m. London, and then 2:30 Central European Time. Okay, so that is what we are looking to do today. Our apologies for the screw up yesterday. And it should be in here, and it will be in here. I'm not going to say should, it will be in here in the Trader Mind sessions. Drop down from the resources tab up here. Okay, so please do join us there today in just under an hour's time for the Trader Mind session. Apologies for yesterday's mistakes and cock-ups. Okay, let's move ahead and go through today's what's been going on and what we've got coming up. We'll start with the calendar. So the really this week is relatively light on the data, but the market seems to be very super sensitive to data at the moment, and it's not actually showing here. But we did get trade data. I think I have to go to yesterday to see the bottom of yesterday. Yeah, so here's the trade data. From China, disappointing trade data for China as market has gone lower. Asian markets lower on that, so that's a negative. And markets following lower after yesterday's sell-off, which really continued from the previous days, which was on the ISM PMI number that we had, which was stronger than expected. The market counterintuitively to an extent. It's not really counterintuitively, but against what the norm is, the normal norm, which would be strong economy, strong market. Right now, we're seeing strong economy, strong data, ISM PMI data, weakness in the market, okay? Because the market's seeing that as maybe Fed being more hawkish, moving ahead, and maybe the peak in rates being a higher peak in rates, okay? So that's the issue we're seeing at the moment. Strong data, as we saw from the jobs data, from the US PMI data on Friday and Monday, respectively, pushing equity markets lower, moving us into risk on, even though it's strong economy data. Okay, so what we want is not too hot, not too cold. The Goldilocks data we want, not too hot, not too cold, just about right. To get the market moving higher. So in here, stocks slip, and again, it's China data compounds recession fears. Okay, so this is on the back of the data that I showed you just there overnight from China. Okay, so concerns about that. Remember, at the moment we have the embargo on Fed speakers because of the Fed meeting we have coming up in a week's time. Okay, so we have the Fed meeting. There's no Fed speakers now until then. So embargo on Fed speakers, meaning that we don't get any information. So that can actually cause a little bit more volatility. And then you get all the Fed pundits come chipping in, giving their views. Okay, so that can sometimes increase a little bit of volatility. But this morning we're slightly lower on the back of the China news. And again, you look, China trade suffers worst slump in 2.5 years as COVID woes, feeble demand take toll. Okay. On the upside of that, though, there have been China reopening rally maybe smoother than actual COVID exit. So we actually have seen some positive news overnight in here, a further relaxation of COVID news. I'm going to go back to 5 things, but just want to go through some of these other. Oil is also down with the risk on move close to 2022 lows on those broader global economic concerns from China, from the potentially more open to a more hawkish Fed if we're seeing a strong recovery. So ridiculously, oil down on China being less productive, on the economy being weaker, but oil also down and stocks down on the US economy being too strong. Yeah. So you've got both those things going on, both positive and negative data. Again, it needs to be not too hot, not too cold. Goldilocks data just about right, and futures fall on growing fears of recession. A lot of punditry going on, a lot of speakers. Top executives at Goldman's, JP Morgan, Bank of America said on Tuesday inflation will erode consumer spending power, and a mild to more pronounced recession was likely ahead. Again, so these commenters on the Fed, on the economy. Okay, so we had I think Jamie Dimon coming on from JP Morgan. We had all sorts in here. So yeah, I mean the concern is in here that we get a more a harder landing, and that's and the Fed are going to be more aggressive potentially on rates, and those two things are compounding to make stocks look less attractive, having had that boost last week after Powell kind of basically reiterated that we will be going with likely a 50 basis point rate hike. And the market, if we go and look at the next week, we're pretty much nailing on. This has been sitting around just above or below 80% now for some time, right? The Fed tool. But if we look out now into June, July, we've been talking about this oscillating between the 475 to 500 and the 500 to 525. Well, look, here we are still for June next year at 500, 525. But by July, it's like, well, which one is it? So maybe hike then cut off. So the market kind of pricing in that peak is going to be one or the other. It's not quite sure. At the moment it's kind of pricing in the 500 to 525, but it's kind of quite close to the 475. So the market's not sure of where that peak is going to be. But then certainly by the time now we get to September, we've got the peak at 475, 500, and then by November, potentially then, for the peak moving away. So the market may be saying, well, we're maybe going to get to a peak now and just hold through the end of the year. Before we were looking for a peak and then a cut. Now I'm just certainly now looking for a cut by now the very end of the year, by the 13th of December. So in whole year's time, we're looking at it to be 450 to 475. So certainly a cut by the end of next year. But the peak now looks like rates going to peak in here by probably March, certainly through the February meeting. We're kind of hitting peak rates, either 475, 450, maybe going to nudge up to 500, 525 through May, and then be maybe on hold right the way through to the end of next year. That's what markets are pricing. So that's kind of your benchmark. That's what we're measuring ourselves again. Let's wind back to 5 things to start your day before I flip to the charts. So Senator Ralph Warnock defeated Republican Herschel Walker in the runoff for the Georgia State U.S. Senate. Democrats holding then a 51-49 in the upper chamber, having lost the House in the midterm elections. Doesn't really change anything massively in here. What it just means is that we have in here potentially that paralysis, extending through the next 2 years, or not potentially, it is going to be extending. And that means that then the stock markets tend to like that, but that's not going to really impact on us. China moved definitively away from its long-held COVID zero policy on Wednesday, as was expected. So some relaxing of measures. And then lots of Wall Street commentary in here. So Solomon from Goldman Sachs, Jamie Dimon of JP Morgan, along with Bank of America, also pointing to potential recession going into next year, and US stocks having had a slight rebound overnight, now lower. Right, let's take a look at a few of the charts. So we did get that slight rebound overnight, but you can see market, here's the S&P. We took out the lows in here. Remember, actually, we were on the webinar when talking about when we were flirting with this trend line. You said, but you guys missed all that. We were flirting with that trend line when we were on the webinar. We ended up not only way through that trend line, but also through these lows in here from back at the end of November. And now we're sitting right above that low. So that's a multi-week low in here. Remember, this big green bar in here is the CPI data. Okay, that's the CPI data that we had from November. See, I'm just going to jump back to the calendar because I think what's important here, if we go to, I'm going to go to next week in here on the calendar just quickly, if I can. Hopefully it's going to allow me to do that. No, I'm not going to get the drop down, I don't think, here on the calendar because we've got it embedded. And let me actually go to the calendar itself. Just bear with me a second, guys. I just want to double check when the CPI release is in here because I'm pretty sure we get that. I'm thinking it's actually Monday because I know we've had PPI coming through this week. So if we go to in here to next week, CPI. Where do we have CPI? I don't see it there. That's strange. It's not this week, right? We don't have it this week. I'm 99% sure it's not. Oh, there it is. Oh, no, it's UK CPI. I don't see it there. Let me just double check. Anyone got that on their calendar? Anyone listening in? US CPI December. Uh, 2022 US CPI December. It's next week, right? We haven't had it yet, I'm sure. Oh, we don't get it. Oh, yeah, we go. December 13th. Okay, the 13th. So that's the date. There we go. December 13th is the CPI release. So we get it on Tuesday. For some reason, not showing there on the investing on Tuesday. Is it in there? Did I miss it? Tuesday. Oh, there it is. CPI. I just missed it. Gosh. CPI, there it is. Okay. So next Tuesday, CPI right ahead of the Fed, right? So very busy, very, very busy Tuesday through Wednesday with CPI and Fed. Okay. But let's go back to the charts in here. So yeah, breaking down and we're sitting just above that low. Remember, this was the big CPI data release, the last one. Okay. So this is what the market can do. And then we got the Fed straight after that. So we're certainly going to be watching that. The low in here is from the low since the CPI release in there is down at 39.12.5. Low so far today is at 39.15.75. So that's going to be an important trigger point. If we break down through there, pre-market open, we could really see an acceleration before we get any liquidity comes in from the cash market. Even after the cash market open, we could see an acceleration if we break through there. Let's go on the 30-minute chart. You can see in here, similar to yesterday's. I was drawing this analysis yesterday when we had the market fading at the 23.6, 1, 2, third failure, then boom on the cash market open lower. Okay, and if we go and then take a look at then what we've had in here this morning, there's the low and then the market selling off, rebounding, fading. And if again I go and put on the Fibonacci retracement of that, just a sell off from yesterday from the peak, you can see fading at the 38.2% in this case, from the 38.2% of that retracement, and then miserably failing, and now a new low. So, but that low in there from the post CPI low from the 17th of November at 39.12.5 is going to be key. Let's go and look at the Nasdaq. Similar story for Nasdaq, although the low here was already breached yesterday, and we didn't have a lower low there, so we're actually at the lowest point since that CPI release in here, and we've got kind of air. That's the real concern in here. There's really not much support in here now down. You'd say really that's a little swing high there as a trigger point. Old resistance now acting as a potential support target. That peak there is the 11,231.25. Do I think we're getting down there today? Probably not, but nevertheless, it's a potential target on the downside because we haven't got much because we had that big super strong rally on the CPI release. If we go into the 30-minute chart now, again, look. So we had the rebound, failed around the 23.6% retracement. If I do similar in here for the Fibonacci retracement from the overnight, you can see again the market just managing just above the 23.6 and then failing miserably, and now a new low. And as I say, there's the lows. The previous lows were down through those, and acceleration as we've broken down through those lows. It all looks kind of quite negative going into the opens now. So certainly not even thinking about at the moment playing that from the long side. Let's take a look at oil and gold. Quick nod to those. So staying negative in here, we already wiped out a week or so ago the low over here from the 28th of September, breaking back down through that low from last week and accelerating again. We have had an intraday bounce in the last 15 minutes or so, but the market certainly looking vulnerable right now. If I go into actually the shorter term chart, which is a lot more than actually the last hour or so, but we're still capped below these resistances in here. Multiple resistances queued up along here between like 74.60 and 74.85 in here for oil, and the market already stuttering already. So I think trade locations is great, and we'll probably talk a bit about this kind of thing in the trader mind session in here about trade location and levels regarding what an analyst would do to compare what a trader would do. But in here for a trader, it's a great trade setup because you've got a really obvious place to put your stop above here. There's going to be a lot of stops there. You could even stop and reverse through that level, but at the moment you could set up short in here and just any kind of break lower in here. I'll be stepping in to like a 5-minute chart. Yeah, any break back down through support around here, 74.18 to 74.12 kind of area down through there. This looks more negative, and you'd look at the little uptrend line as well that we've got from the more recent activity from the last couple of hours. Look, we're already broken through that. So yeah, and breaking down through the support that I just mentioned there already. Yeah, so this is looking, I'd be pulling the trigger on this with a stop up here like a 74 kind of 85 level. For oil, let's take a look at gold in here. So stuttering yesterday, kind of sideways, having had the setback the previous day. So nowhere near as negative of what we're seeing. Remember, this is kind of positively correlated with stocks, but at the moment, not anywhere near seeing the negativity that you were seeing on stocks from gold. And if we step into the 15-minute chart sideways, so I'd be very tentatively looking at this as a potential basing pattern, but really probably just waiting for breakout and simply probably going for a breakout. You've got all these peaks in here more recently, and you can see they're kind of lining up with this peak over here. So above there looks more positive, and then obviously quite simply, if we go, I'd probably actually draw up down through there, so you're looking for a break above like 1788, 89, and down through like 1780, 79 on the downside looks more negative. All right, guys, I'm going to wrap it all up there. Remember, you're going to be back with us very hopefully going back. It will be on this page, okay? Drop down resources, trader mind session. Please do join us in just 42 minutes and 17 seconds time. James and I will be back on talking about the different approaches and maybe how to read like a technical analysis report, different approaches to kind of trading and trade setup. So we're going to be looking at a little bit of that and the psychology of not getting pulled into selling into the hole or buying into the hole, as we say, given that markets are breaking. As they break the more important bigger levels, you're trying to preempt the break of those levels or wait for those levels to break and then make a decision to see if the market's going to retrace before you. But actually around the actual big levels is not necessarily the best trade location. So we'll be talking about and expanding on that in the trader mind session. Please do join us in just over 40 minutes time. Come in here, resources, trader mind sessions onto this page, and we'll be streaming in here with the sound on in 40 minutes time. Looking forward to seeing you guys then. Take care. Till then.